Okay, so if you've been anywhere near the crypto world lately, you know the name Onyxcoin or XCN. It's everywhere. The hype is just off the charts. But today we're going to cut through all that noise. We're going to look at the hard data that's flashing a major warning sign for August. And it's one you really can't afford to ignore it. I mean, you've seen this stuff, right? The next big thing in DeFi. You've heard all the chatter about 100x games and how the whales are accumulating. It's like this powerful siren song that just pulls people in and creates this massive FOMO. And that really is the $1,000,000 question, isn't it? Hype is one thing, but data is another. So right now we're going to dig in and uncover the on-chain data and the technical signals that a lot of the market might be sleeping on. And these signals, well, they tell a very different story. But look, before we dive into the warnings, we got to be fair. We need to understand the bull case. Let's take a quick look at exactly why everyone is so fired up about this coin in the first place. So the bullish story really stands on three legs. First, you've got that explosive price action, which of course gets traders really excited. Second, there's actual real development happening, like new staking rewards that give people a reason to hold on to the coin. And finally, you have that incredible market sentiment, all the talk about huge buy orders and whales quietly buying up supplies. So with all that going for it, you'd think it's a total slam dunk, right? A guaranteed win. But this is where things get really interesting. When we pivot from the story to the cold hard data, a few pretty concerning signs start to pop up. And that brings us to our first major red flag, fading momentum. Now, this is a classic signal in the trading world, and it basically suggests that the energy, the fuel behind this recent price pump is starting to run out. Honestly, this analogy just nails it. Imagine you're pushing a car up a steep hill. It takes a ton of constant effort, right? The second that force starts to weaken, even if the car is still creeping forward, its momentum is gone. A reversal isn't just a possibility. It becomes almost inevitable. And this is exactly what we're seeing with Onyxcoin. The price has been climbing, but the 24-hour trading volume has been falling. A price going up while it goes down is a textbook sign of exhaustion. It means fewer and fewer traders are participating in the push higher. Conviction is getting weaker, and that leaves the price incredibly vulnerable to a fast, sharp reverse. Okay, so that leads us right into our second warning, which digs a little deeper into the network itself. We're going to look at a critical on-chain metric to answer a simple question. Is this network actually overvalued? The metric we're talking about is called the NVT ratio. Now, don't let the name scare you. The easiest way to think about it is like the PE ratio for a stock. It basically tells us if a crypto's massive valuation is actually supported by real-world use on its network, or if it's just being propped up by pure speculation. And here's the kicker. Right now, Onyxcoin's NVT ratio is getting high. It's becoming elevated. And that is a huge warning sign. It suggests that the price, the valuation, is running way ahead of its fundamental use. In other words, the hype might be doing a lot more of the heavy lifting than actual organic adoption is. All right, so we've looked at momentum, we've looked at on-chain value. Now let's pull up the price charts for warning number 3. And for the bulls, the picture here doesn't get much prettier. It really looks like the price is just quack hitting a wall. So right now, Onyxcoin is basically fighting a war on multiple fronts. It's struggling just to stay above its 50-day moving average, which is a key line in the sand for traders. But even if it clears that, it runs smack into a wall of sellers around the 128 mark. And if it somehow gets past that, there's an even bigger wall waiting just above 2 cents. With this much resistance stacked up overhead, the path of least resistance could very well be down. Now, for our final warning, we need to do something really important. We need to zoom out because it's so easy to get caught up in the excitement of a recent pump, but you absolutely cannot forget the past, the big picture. It gives us some crucial context here. Just look at this number, 91%. That's how far Onyxcoin has fallen from its all-time high, which was set back in May of 2022 at over 18. So even after this impressive recent pump, the price is still down over 90% from its peak. And this is why that context matters so much. Yeah, the reason pub looks great on a short-term chart, but when you zoom out, it's just a tiny little blip in what is a much larger bearish trend, acknowledging that history isn't about being negative, it's about being smart and managing your risks. So after all these warnings, you're probably asking, okay, so what do I do? What's the actual game plan for August? So the goal here isn't to spread fear. It's to use all this data to build a clear, intelligent strategy. Look, given all these signs the fading momentum, the high valuation, the technical walls, the data is strongly suggesting that a pullback is more likely than a breakout from here. That means just blindly jumping in and chasing this pump because of FOMO, well, they could be a very expensive mistake. This is a time to pause and reassess, not to double down. So let's make this super practical. These are the key price levels you need to have on your radar. If the price can somehow break above that huge resistance wall at 0.0214, that would be a very powerful signal that the bulls are back in full control. On the flip side, if the price breaks below the support level at 0.0134, that could be the trigger for a correction down towards those lower targets at a fall or even 0.06. So let's just quickly recap our 4 major red flags. Right? We've got 1, fading momentum; 2, potential overvaluation based on its network use; 3, a massive wall of technical resistance overhead; and 4, a pretty brutal long-term bearish chart. Put it all together, and it's a clear signal that being cautious is probably the smart play for August, which really just leaves us with one final question. And this one's for you. The story, the hype around Onyxcoin is obviously really powerful, but the data is flashing some serious warning signs. So after seeing all the evidence, has your perspective shifted at all? Are you still bullish, or are you becoming a bit more cautious? I'd love to know what you think. Thanks for joining me.